The crypto market may be sleeping on one of the biggest developments of the year, and most people still do not understand what is happening behind the scenes. While many traders are watching short-term price candles and reacting to daily moves, Ripple is building relationships, expanding influence, and placing itself in rooms where billion-dollar decisions are made. This is the kind of activity that often happens quietly before the market fully reacts. And if this momentum continues, XRP could be entering one of the most important phases in its history. Welcome back to XRP and Gold Silver Scope, where we track smart money, future trends, and the real forces moving crypto, gold, and silver markets. Today, we need to talk about why Ripple's latest moves are getting attention from serious investors around the world. Ripple's leadership has once again signaled that major progress is happening. The company is not acting like a small crypto project trying to survive market cycles. It is behaving like a global financial technology player preparing for long-term expansion. That difference matters. Many digital assets depend only on hype, social media trends, and retail excitement. Ripple, on the other hand, continues focusing on partnerships, regulation, payment systems, and enterprise adoption. Those are the building blocks that can create lasting value over time. One of the biggest reasons investors are paying attention now is the growing importance of upcoming Ripple-focused events. These gatherings are not just community meetups. They are places where executives, institutions, developers, and financial leaders connect. When powerful people meet in one room, deals can begin, partnerships can grow, and future announcements can be prepared. Markets often ignore these moments until the results become public later. By then, smart money may already be positioned. Recent sponsor and attendee interest shows something important. Traditional finance is no longer standing far away from crypto. Banks, payment firms, investment companies, and fintech groups are now actively exploring blockchain integration. That is a major shift from previous years when many institutions openly criticized digital assets. Today, the conversation has changed from "should we enter crypto" to "how fast can we build products before competitors do?" That is exactly the environment where Ripple can benefit. Ripple has spent years focusing on cross-border payments, settlement speed, liquidity efficiency, and compliance. These are real-world business problems that financial institutions care about. Sending money across borders is still expensive, slow, and inefficient in many parts of the world. Legacy systems take time, charge fees, and create friction. Ripple's technology was designed to solve these issues. If institutions want faster settlement and lower costs, XRP becomes part of a bigger conversation. This is why every event connected to Ripple now matters more than before. If major banks, fintech leaders, treasury experts, and payment companies attend these conferences, it means they are searching for solutions. They are not attending for entertainment. They are attending because money moves where efficiency improves. When large organizations find a tool that saves millions in cost and time, adoption can happen faster than many expect. Another reason this moment feels different is regulation. For years, uncertainty slowed progress across crypto markets. Big institutions usually avoid unclear environments because they need legal confidence before launching products. But now the landscape is changing. More licenses, more frameworks, and more structured rules are opening doors for companies that are ready. Ripple has spent years preparing for exactly this type of transition. Instead of hiding from regulation, the company leaned into it. That strategy may now begin paying off. If payment licenses expand, if banks can work more closely with digital asset systems, and if new rails become available, Ripple could move faster than many competitors. Why? Because preparation matters. Companies that built during uncertain years are usually first to benefit when conditions improve. That is how cycles work in finance, commodities, and crypto alike. As analysts of gold and silver markets know, major moves often begin before headlines become obvious. Institutions position early. They study trends, build exposure quietly, and wait for public attention later. The same principle can apply here. XRP price action may move up and down daily, but long-term investors often focus on adoption signals, infrastructure growth, and institutional behavior. Those signals are becoming harder to ignore. Many retail traders make one mistake. They look only at charts and forget the business side. Price is important, but price follows narrative, liquidity, and utility over time. If Ripple continues building global relevance while new institutions enter the crypto sector, XRP may gain stronger foundations than many realize. That does not guarantee instant price explosions, but it does create a stronger long-term case. We should also remember market psychology. When sentiment is weak, most people lose patience. When prices move sideways, attention disappears. But historically, some of the best setups form when markets are quiet and confidence is low. Then one catalyst changes everything. A new partnership, policy shift, banking integration, or major announcement can quickly wake up the market. Right now, Ripple appears focused on positioning itself for that type of catalyst-rich environment. Instead of chasing noise, it is building connections where global finance meets blockchain innovation. That is why serious investors are watching closely. The next few months could reveal whether these moves turn into something much bigger. Now let us go deeper into what may become the biggest driver of the next XRP move: institutional money. Retail investors create excitement, but institutions create scale. When everyday traders buy and sell, prices can move fast for short periods. But when banks, asset managers, payment firms, and global financial companies enter a market, they bring serious capital, long-term planning, and infrastructure growth. That is why this phase matters so much for Ripple and XRP. Across the financial world, large companies are no longer ignoring crypto. They are launching digital asset products, exploring tokenization, building custody systems, and offering new services to clients. This tells us one simple truth. They believe the future financial system will include blockchain technology. They may compete with each other, but they all agree on one thing now: digital finance is here to stay. This creates a major opportunity for Ripple because Ripple's business model has always been closer to institutional finance than meme speculation. Ripple focused on payments, settlements, liquidity, and real business use cases, while many projects focused only on hype. Years ago, some people mocked that strategy because it looked slower. But now that regulation is improving and institutions are entering, Ripple's approach looks far more valuable. Think about how banks operate. They need speed, trust, security, compliance, and cost efficiency. They do not move billions of dollars based on internet trends. They need systems that solve real problems. Cross-border payments remain one of the largest problems in finance. Transfers between countries can still take time, involve middlemen, and create unnecessary costs. If a system can reduce friction, banks pay attention immediately. This is where XRP enters the conversation. XRP has long been discussed as a bridge asset that can help move value efficiently between currencies and systems. Whether every institution uses it directly or indirectly, the important point is that Ripple's ecosystem was built around improving money movement. In a world where trillions move globally, even small efficiency gains can create enormous value. Now imagine what happens when regulations become clearer and new payment access expands. Institutions that were waiting on the sidelines may suddenly move forward. Those who delayed decisions could rush in at the same time to avoid falling behind competitors. This often creates rapid growth phases in markets. We saw it in technology stocks, commodities, internet businesses, and now it may happen in blockchain finance. Another important factor is trust. Many traditional companies do not want to build everything from zero. They prefer working with established firms that already understand compliance and enterprise needs. Ripple has years of experience dealing with regulators, financial firms, and global partners. That history matters. In finance, reputation can open doors faster than marketing ever will. There is also a hidden angle many retail traders miss: infrastructure spending. When institutions enter a sector, they do not just buy assets. They hire teams, build systems, form partnerships, create products, and educate clients. That spending can support the entire ecosystem around an asset. If XRP benefits from broader ripple expansion, then value can grow through utility and network effects, not only speculation. Some investors only ask, when moon? Smart investors ask better questions. Who is building? Who is partnering? Who is gaining licenses? Who is preparing for future demand? Those questions often lead to stronger opportunities. Ripple keeps appearing in these conversations because it is tied to real financial use cases. Of course, markets never move in straight lines. Short-term corrections can happen anytime. Broader stock market weakness, fear headlines, or profit-taking can pressure crypto prices temporarily. That is normal. Gold, silver, stocks, and crypto all experience these phases. But strong long-term trends are usually built through multiple pullbacks, not one perfect straight rally. This is why patient investors focus on separation between noise and fundamentals. Noise is daily fear. Fundamentals are adoption, access, regulation, partnerships, and institutional demand. If Ripple keeps improving fundamentals, then short-term volatility may become less important over time. We should also compare this to gold and silver cycles. Precious metals often move quietly for long periods, while smart money accumulates. Then when inflation fears, currency concerns, or macro shifts arrive, prices wake up suddenly. Crypto markets can behave similarly. Quiet accumulation phases often look boring until they are over. Right now, XRP may be in a period where many underestimate what is forming underneath the surface. Institutions are learning. Payment systems are evolving. Tokenization is growing. Financial companies want blockchain exposure. And Ripple has positioned itself in the middle of these trends. That does not mean every headline will be positive or every week will be green. It means the bigger picture may be stronger than daily charts suggest. Investors who only react emotionally often miss transitions like this. Investors who study structure, adoption, and capital flows usually see them earlier. If the next crypto cycle is driven less by hype and more by real-world utility, Ripple could be one of the names that benefits the most. It already speaks the language institutions understand: efficiency, compliance, scalability, and savings. That combination can be powerful in a maturing market. Now let us talk about the future outlook for XRP, because this is where emotion often defeats logic. Many people either become blindly bullish and expect instant riches, or they become impatient and quit too early. Smart investors usually stay in the middle. They understand opportunity, but they also respect risk. That balanced mindset is how serious wealth is often built in every market, whether it is gold, silver, stocks, or crypto. XRP's future may depend on three major forces coming together at the same time. First is regulation. If clearer rules continue expanding, institutions will feel safer entering the market. Second is utility. If Ripple keeps growing payment solutions, partnerships, and real-world usage, XRP gains stronger long-term relevance. Third is sentiment. When public excitement returns, liquidity can rush back quickly. If all three forces align, price reactions can be powerful, but investors should stay realistic. No asset moves upward forever. Even strong markets face pullbacks, shakeouts, and fear periods. This is how weak hands get removed, and patient money gets rewarded. We have seen it in silver many times. We have seen it in gold many times. Sharp corrections often happen right before stronger recoveries. Crypto is no different. One reason many traders lose money is because they chase green candles and panic during red candles. They buy when everyone is excited and sell when everyone is afraid. That is backwards behavior. Professionals often do the opposite. They study fundamentals during fear and manage profits during euphoria. If you want better results, emotional discipline matters more than social media hype. For XRP specifically, investors should watch several signals closely. Watch for major partnerships. Watch for payment adoption news. Watch for progress in regulation. Watch for growth in tokenized finance and cross-border settlement demand. Watch for broader crypto market strength led by institutional products. These signals tell a stronger story than random daily price predictions. There is also a macroeconomic angle. If trust in traditional currencies weakens, if debt concerns rise, or if global payment systems need modernization, alternative financial networks become more attractive. This is why I always connect crypto with gold and silver thinking. Precious metals historically benefit when confidence in old systems declines. Certain digital assets may benefit for similar reasons in the modern era. At the same time, competition exists. XRP is not the only project targeting utility. New technologies will continue emerging. Governments may build their own systems. Banks may develop private rails. That means Ripple cannot stand still. It must continue innovating, expanding, and proving value. The good news for supporters is that Ripple has shown long-term staying power while many competitors disappeared. So what is the realistic upside case? If institutional adoption accelerates, Ripple expands globally, and crypto enters another strong cycle, XRP could attract much larger demand than many expect. If those conditions do not fully arrive yet, then progress may be slower and price may remain volatile. That is why timelines matter. Being right too early can feel like being wrong. Patience is often the hidden skill. This is why portfolio strategy matters more than blind hope. Never risk money you cannot afford to hold through volatility. Never depend on one asset for your future. Diversification, patience, and research remain smarter than emotional all-in decisions. Whether you love XRP, gold, silver, or stocks, risk management should always come first. My honest view is simple. Ripple has positioned itself better than many people realize. It has brand recognition, enterprise focus, global relevance, and a product story institutions understand. That does not guarantee immediate explosions, but it creates a serious foundation. In markets, strong foundations matter because they can support future growth when conditions improve. So while some people focus only on daily noise, smart investors may focus on the next few years. That is where real trends are formed. If XRP becomes part of a larger transformation in payments and digital finance, today's uncertainty could look very different in hindsight. Keep your eyes open, keep emotions under control, and keep learning. Big opportunities often look confusing before they look obvious. If you enjoy deep market breakdowns on XRP, crypto, gold, and silver, make sure to subscribe to XRP and Gold Silver Scope and stay ahead of the crowd. We focus on logic, trends, and smart money moves, not empty hype.